Thanks, Jeff. I did a similar presentation with Jeff down in Lodi last year, and I think we were in the same situation, which was we were the last ones to speak before the wine. So I know that I'm keeping you away from your wine, and so I'll keep this brief. I also taught a class at Sonoma State yesterday, which was 4 hours standing on my feet talking about succession planning and purchase and sales of wineries, and so 5 minutes of talking will work well for me, and I really appreciate being here, and I appreciate the two stories. I think for people to hear from actual people that are going through this is more beneficial than for advisors to get up here and tell you what we think you ought to be doing. So I'm going to kind of talk about a few things that I see in the succession planning area. I've been doing this work for about 25 years. Work with a lot of family-owned businesses, a lot in the wine industry, and I think some of this will dovetail on what the two gentlemen have talked about here. And what I see is why people don't plan, and just a little bit on the failure plan, and then give you a little bit of an idea of a roadmap of how we kind of go through the planning process, which may make it not as daunting as it actually seems. The things I've seen over time is people don't do this because it's not a high urgency matter. Every client I've talked to about their business and their family, they love to talk about their family and they love to talk about their business, and they say, yeah, I got to do this, and 5 minutes later they walk out the door and they have 50 messages, emails, work to do. This gets pushed to the back burner. Related to that is mortality. None of us is going to get out of here alive, as far as I know, and a lot of people just don't like to think about those types of things. The third thing I see is kind of a cost-benefit analysis. I worked for an accounting firm. Before that, I was a lawyer. I like to refer to myself as a recovering attorney, so don't hold that against me. But we'll often sit down with clients and talk about this, and the cost of the advisors to help take you through this process is not an immediate return on your investment. If I sit down with a client and I can tell you how I can save you $100,000 of taxes this year, you'll pay me to save you that $100,000 of taxes. If I tell you how I might be able to save you estate taxes in the future, people often pay people to put together an estate plan that saves estate tax. But if I talk to you and tell you that it's going to cost you to go through this succession planning process, that ultimately I can give you a higher likelihood of you meeting your goals, your kids meeting their goals, and preserving more of your wealth from your other beneficiary, the IRS, people tend to balk a little bit at that because it's a future return for a current cost. But I think we all see the cost of not doing that being problematic. The other thing that I see is people don't want to rock the boat. Not every family is perfect. There are issues within families. I will tell you from my role, I came to work for a CPA firm. I'd start working with our clients, and some of my partners would get a little nervous because I would be asking these questions about family and kids and those types of things. I don't think I've come across a family situation where there isn't some understanding of whatever those issues are, whether it's issues between parents and their children or between siblings. They're there. My view is we might as well address them, but that's completely up to you if you don't want to. But oftentimes I think that's why people don't want to plan, is because they don't want to bring those issues to the table. But failing to plan, I think, leads to some of the things that these gentlemen and their families are trying to avoid. If we don't plan ahead of time, the next generation isn't going to have done the things that they need to do, or we can't make a determination of whether or not they're going to be capable or even want to take over the business. If we don't plan ahead of time, oftentimes we end up with a situation where the family business is owned by all of the siblings equally because that made sense and it was fair and nobody really wanted to plan. My view is that may or may not be the right result, but we want to get to a result and a structure that preserves the value of that asset in the next generation. From my perspective, part of that planning process is, you've worked hard all your life to build up these assets. How do we transfer them to the next generation in a way that preserves the value of the business, preserves the family, and minimizes taxes? And so that's kind of the overall arching feature there. And the other thing I've seen for business owners who start this process too late is not fully understanding what their own personal financial needs are and how they can meet those needs if they're not attached to the family business, the winery, or the vineyard. And so that often creates a need to continue to use the cash flow from the business to fund that generation's needs, which creates some issues in the next generation of either not allowing them to take over because the older generation wants to maintain control because they need the cash flow from the business. And it can lead to issues if not addressed earlier on. I think it's one of the big things that I see is that people don't think about that financial planning and their financial well-being is connected to the business until it gets too late to do some of the things that we might otherwise be able to do. Just briefly going through the process, and then I'm going to kind of break it down in just a couple of minutes to talk about how can we move forward, because it's all about, in my view, taking those first steps and moving down that path and not saying, oh my God, this is too daunting, I don't even know where to begin, and maybe if we can break it down into smaller steps, we can actually make some progress. I worked for an accounting firm. I was a tax attorney. I love numbers and the tax code. I'm kind of weird that way, but I'm not going to bore you with any of those things today, because when I work with clients going through this process, a lot of that to me is the mousetrap, how to build the mousetrap to get you the result that you want, where the real important thing is understanding what it is you want. And I think that, to me, is the critical first step, and both have talked about that, which is, what do I want for myself? You know, if I'm the generation that's moving out, what's important to me personally? What are my needs, and what are my needs connected with the business? Secondarily, what are the needs of the business? What do I want to have happen to this business? How do I keep this business thriving? And then how do I tie into that? What do I want for my family? You know, some people may want their family in the business, some may not, but it's really kind of identifying what your goals and objectives in that area are and prioritizing them. And then simply, once we get a little clarity on what those goals are, we can kind of look at where you are relative to those goals and then say, okay, here are the things that we may need to do going forward to get that result that you want. Because this is personal, it's related to your family and what your family values are and what you would like for your kids and your business going forward. And to me, that's different for everybody. That whole process to say, start figuring out, okay, what is it that's important to me? Where am I related to that? And how do I get down the road to where I ultimately want to be when I exit my business and ride off into the sunset? Can take a long time. It's an iterative process. It continues throughout your lifetime. And a lot of people could look at that and go, my God, that sounds like a lot of time, a lot of work. I just can't get started. For me, I often tell people who don't want to get all the way down to the road, let's just start by moving down the road, and let's just take this in steps. So it can be as simple as the first step of just having a meeting with whoever those trusted advisors are that you have, the ones that you can confide in about this and that you trust, and have a session where you really get your goals and your objectives clear. And that can be as far as you go at that point in time. And then once you get to that point, if you're able to figure out kind of what direction you're going down, then you can start working on the things that are important in that area. And I sometimes sort of break it down into kind of two components, because we talk a lot about family succession planning, and as we know, every family doesn't end up with a succession in the next generation. Some families and long-term family business decide to sell. It's a decision they've made. It's not, oh, we have to sell. And if somebody's in a place where they've decided that's what's best for their family, then if you got enough time ahead of time, you can do a lot of things to maximize the value of your asset and minimize, through structuring and estate planning, which Jamie's going to talk about a little bit, how to minimize the taxes so that you can maximize what it is you're getting out of exiting that business and providing for your children in other ways. I've got certain clients that have sold their business and have become the bank for their children, as opposed to trying to get everybody on board like Craig has. You may say that your goal is that family succession, that I want to leave the business in my family, where do I go from there? And to me, there's sort of three places, and they touched on these. One is figuring out, okay, if I'm the one who's exiting the business, what do I need to get out of the business? Where's that cash flow going to come from? And how is that going to relate to the next generation and their operation of the business? Secondarily, the estate planning piece, which is I've built up this asset, I'm going to transition it to the next generation. How do I do that in a tax efficient manner? And the third piece, which I think is critically important in this whole process, is what is the management succession piece? What plan have I put in place for my children to be able to determine whether they are going to be able to manage this company, own this company, or be employed in this company? I think sometimes, just in closing, for sort of the entrepreneur, business owner who created his company and was all of those things, they owned it, they were an employee, and they ran it. It's sometimes difficult to think of your children having different capacities. They may just be an owner who has a return on their investment by owning a part of the business. They may be employed in a non-management role, or they may be, running the business. And to sort of put together a plan as to how somebody can get there, I think is critical. And with that, I will turn it over to Jamie, and appreciate your time. Thanks.
Sure.